Hey, good morning, everyone. How's it going? I hope you had a terrific weekend. I want to thank everybody being here in the Hit and Run Candlesticks trading room. I appreciate it. I see not much has changed over the weekend. We still have the same problems. Not much at all. Hey, one question that I was asked this weekend via email and a couple of text messages and some private messages here in the Using the Room app was, is the bottom in? And you know, I don't honestly think anybody can tell you if the bottom is in or is the bottom not in on the market. We're just going to look at the SPY here. And so the only thing we can really do is look at the chart and simply trade the chart. Keep it simple and just trade with the charts. I know there's all kinds of headlines and I know there's all kinds of news and everybody's wondering, but the reality is that's so hard to trade. I mean, there's some hot spots you might be able to trade in. The thing of it is, they're hot today. They could rip your face off tomorrow. So news is a bit fickle to trade where the charts are not. If we stay with the charts, everything is right there. You might not get that super instant to the second type movement that sometimes news might give you, but in the end it's the charts that's going to win, I believe, anyway. So here's what I see in the SPY chart. We've come down to the 500, the dotted 500 moving average right here. We put in a strong bullish piercing candle. Does that guarantee that's a bottom? I can't predict that. All I can do is trade based on the candles that I see in front of me. So we have this strong bullish piercing candle, and we do have follow through on Friday. So here we are today. And I mean, I've got to ask, which I'm not really looking for an answer here from anybody. But is there any, I mean, like I said, well, if you guys want to answer, you can. But were there any doubts that after 2 days up, we're going to see some consolidation? I mean, was anybody really leaning into Friday that, oh heck, this market is rip and roaring and that's what you expect? That's just crazy if it was. So we've got to expect there's a pullback, and that's exactly what we're having. Now, what I'm surprised at, which this is just pre-market, is this is all the pullback we have. That's what I'm surprised at. So I'm going to keep an eye on this. I'm going to keep an eye on this possible reversal. Now, we haven't truly reversed until we start, man, I'm going to go with right there. I'm going to go with this high. This candle, there you go. Just let it run down. I'm going to go with, if we start moving up into this area here, then the bulls have a fighting chance. It's just a matter at this point of chipping away at these recent highs to get back up to retest the high up here at 478.70. Now I have no inside information. I can't look down the road and say, hey, that's what's going to happen. I can't look down the road and say we're going to totally fail here. All I can do is follow the charts. And this keeps trading so simple. It just simplifies everything. You can just tune out the news, and if you just follow the chart, it tells you what to do or what's going on. For instance, we're in this downtrend. Be very cautious. It does not mean go out and be short either. We want to be short when we start seeing lows take themselves out. That's what we want to do. Just being short on the news, yeah, that might work fine and dandy, but what happens, in 3 days if there's some sort of an agreement somewhere? Well, now you're just going to be sorry. So don't predict, just trade the chart. One thing that I do think is beneficial in this current market attitude is trade lighter than normal. I think that is a sign of a successful trader, a smart trader, somebody who backs off that gas pedal a little bit, pumps the brakes just a tad. Don't be all crazy going long. Don't be all crazy going short. Play the charts in front of you. Have fewer positions on, and again, lighten up the positions just a little bit. I think that'll be very, very beneficial. So, all right, let's take a look at some charts here. Again, I want to thank everybody for being here. I truly, truly appreciate it. And well, let's just jump right in. There we go. So here, we this Thursday and Friday, we saw a tremendous move in the market in the bullish direction. I mean, it was tremendous. It was monstrous. Do not confuse that with it's going to continue. I cannot predict that it's going to continue. I can only tell you what I saw. And what I saw is the same thing you saw. Was Thursday and Friday was a monster. It was incredible. So what we need from that is simple follow through. That's it. Simple follow through. And we can see that on all the charts. So one of the things that I'm going to pay attention to are charts that are beat down a bit, because there are some really nice charts that are beat down and really oversold. So that type of a scan can be very beneficial to you for those relief rallies, for the swing traders, but also for the traders that's looking for something a little long-term, position traders that want to get into something and you want to hold it maybe for a little longer. This is the type of scan that can hunt up those stocks that are beat down right here. So let's take a look at run. Excuse me. Here we've got a massive bullish engulf on Thursday, and then Friday just a little doji here. So the whole trick here again is follow through. It doesn't matter if let's do this. Here we go. Say this morning we weren't popping up like this. What if we were down here? This could still be a buy for many traders, but the key is follow through above that line. Follow through above this candle. That's the key. So I'm more of a especially in this market where it's a little bit rickety. I'm probably more of a not necessarily a buyer here as much as I would be a buyer above a little bit. So on a breakout, or at least above the T line, or at least above the Trendicator, something like that. So here we have a run showing a little bit of follow through. Now, I think a really excellent way to look at a trade is when we have that follow through nice and tight right in there is a great place to look at a trade. I'm looking for a target of about 35.80, and that's just not necessarily the first swing as much as the near future swing. Near future can be a month away, by the way. But we're talking 49–50% up there. So the idea of being able to, let's make that a little smaller. There we go. The idea of being able to buy something and swing it to the upside, take profits, and then let it rest again, because we all know that's what's going to happen. Let it rest again. We'll look for those entries. We'll swing those profits and let it do it again if it wants. And just keep doing that. Just keep doing that. Here's another one. Well, if the market starts to fail, if the overall market starts to fail, something I like to do is just quickly go after some inverse ETFs like SQQQ or TZA or some of the SPY inverse ETFs. I think I have RWM in here as well. So if the market does start to fail, we have a little safety built in looking in the watch list. We'll see these start to move up. Now here on SQQQ, we've got this massive dark cloud cover, or bearish belt hold is what it is. Here we've had a lower low, and we're sitting right here today. Tells us absolutely nothing. Really nothing. If we start to see, here we go, there. If we start to see failure down below Friday's candle, that would say that the bulls are holding well in this market. If we start to see SQQQ here move up above this 44.50 area, that's a sign that the bulls are losing ground and the sellers are taking control. And this might be an area where I look to pick up some SQQQ. And from there, I'm going to look at the dotted 500 up here as a target area, and that's about 34% up. Zin is one for the past couple of weeks I've looked at, wanted to buy it. I just think this is a really nice chart setup. I just haven't had that loving feeling yet that, hey, this is the trade for me. Just haven't had it yet. All through all this, just haven't had it, but I've certainly been watching it. Well, I think what I'm looking at now is if we can show strength and hold up somewhere in this area right here, somewhere right in there, then I'll be looking for a trade, and I'm going to look for it'll be about 10-15% up there, depending exactly where it's bought. I'm not particularly interested in buying it down here. I just need to see that, but that's just me. Other traders bought it like crazy over here. I know a few people that did. I know people that bought it Friday, and I'm sure there's going to be buyers in here today where it is. But I'm looking for a little bit more of that, a little bit of move up. I don't know, something that gives me that loving feeling that it's ready to go. Chart-wise, I think it's absolutely beautiful. Great chart construction back through here. Nice double bottom here. We've rallied up. We're resting here, just right on some major moving averages like it should be doing. I love that. So if I start to see a breakout of some of these major moving averages in here, that's what I'm going to look at here. And here's this RWM. So if we start to see IWM fail, market fail a little bit. Sometimes IWM will fail without the market failing, especially of late. Excuse me. If we start to see that happen, this will be just like the Qs. So what we're going to do is just keep an eye here. If I start to see today's candle drop below Friday's low, that's a sign that the bulls are holding things up. They're doing a pretty good job, as long as that happens. If we start to see this RWM come up here and climb up about this 2350 area, then that tells me that the sellers are winning and the bulls are taking control over the overall market. And or even if IWM starts to drop, we'll see this start to come up here, and that might be something I take a look at. Snap I think is setting up. Snap is one that we traded right through here, made some good money, and I've had it on the watch, just waiting again for that loving feeling when things are right. And that loving feeling comes from the charts and the overall market attitude. It's just not, it's not just something I make up. It's making sense of the charts, being confident of the charts and the market. And when I get the confidence, then that's what I'm going to be looking at. Right now, I would probably look at something over the 50 period moving average if I saw that. Based on this chart pattern, we've got actually a couple of dojis here. Man, I have a scratchy throat this morning. Quick drink. Excuse me. Nice bullish engulf here. Very clean. Opened right up, went to the top. Now we have a doji Friday, a little doji today. We're holding over the Trendicator. I just need to see a little bullishness to show me that the bulls are hanging around. I might take a trade in that. I'm looking at 48.35 as a good target zone for a swing trade, and that represents about 26% By the time I get in it, maybe 24%, 23, something like that. And that's plenty good money. If we go back a little bit, we've got an excellent bull kicker here. And to me, this is just resting, just simply resting. Space is one of these, excuse me. Space is one of these long shot trades, if you ask me. I'm not saying it can't go up here. I don't know if it's going to be this week, or I don't know if it's going to be 10 years from now. I don't know. All I can do is follow the charts. That's it. And here we see a nice bottom. Here we see a nice bullish engulf with a Hiromi and follow through on Friday. And we're sitting here with a little doji here today. I love that chart pattern. Remember, it's all about follow through. It's all about follow through. So if we start to see bullishness step in here, I don't see any reason why we can't get up here to whatever that is. I'll put a line up there. I should have had one. So somewhere between 11 and 12 bucks up here, which represents about a 34% trade. Now, I don't know about you guys. I really don't. But I can tell you, for me, a 34% trade in the stock is magic. There we go, right to these tops here, about 1170. 34% is nothing to sneeze at, nothing at all, and that would just be a beautiful, beautiful trade. And you know, just a quick talk about stops. Stops are simple. We have a chart that's in a, well, no, let's just back this up. We have a bullish engulf, right? So where's the stop on a bullish engulf? It could be in a couple places depending on who you are. But one good rule of thumb is if it can stay on the upper end, the top 50% of that bullish engulf, that suggests that bullish engulf is still alive right there. Now, I'm not going to just take that 50%. I'm going to come in here and use maybe a couple of candles in here to help me out, but that's going to be the first thing I look to. There's also nothing wrong with, say, yesterday's low. If we can't hold Friday's low, if we can't hold Friday's low, that would make a great stop. Keep things simple. Don't complicate it. And there is nothing complicated about looking for a stop here. The key is to grab the education while it's there. Focus on education and then trade, not the other way around. Don't trade and think you're going to salt and pepper a little of education in there. Actually, that does work as long as you have money. Unfortunately, what happens is traders come to a point where they they're trying to trade and salt and pepper a little education in there, and then they realize that their account has dwindled down to nothing. The key is education first, then trade. Thomas, TMUS, I think is setting up quite nice. So I'm looking at something about 8.75% maybe, starting in here up to about right here. And then I'm looking at another 11, 11.5, 12% maybe from this area up on Thomas. Here we've got a nice rally to the upside. We're holding up quite well. We did pull back a little bit, again, holding well, bullish engulf, doji. I think this is a great looking chart, providing we see the bullishness in here. Terrific chart. And just because we have a terrific chart, it does not mean that it's guaranteed to work. A lot of great looking charts don't work at the time we're looking at them. We might like it here right now, and then maybe for a couple of days it just does this. That doesn't mean it's failed, because what happens when this happens? Whoops, there we go. Move up. It just right now might not be the exact time. This is why I want to wait patiently and wait for those bulls to step in. That'll give us a little low, high, higher low, and then we'll look for that higher high. We've got a nice bullish J-hook setting up right now. And the last stock that I have here on today's watch list, and again, I just want to reach out and say thank you, everybody, for being here. I truly appreciate it. Take a look at Tech, TECK. We pulled back here a little bit. We popped back up, a nice inside day. I'm looking about 17% for a good swing, and then we can swing it further on up. We take a look at this. We've broken out here. So here we rallied up. We broke out. We came back. We've tested, and now it looks like the bulls are marching forward again. All righty. Again, this is Rick with Hit Run Candlesticks. I want to thank everybody for being here. Let's all meet back here in about 20 minutes, and let's get this market open. Remember now, the first thing in the morning, the thing to do is watch the positions you are in. No position, no trade needs to be taken the first 2 minutes of the market. Believe me, we don't need that kind of headache. See everybody in about 20.